In our first headline, what Wall Street hopes for Boeing in the wake of the 737 MAX grounding and what investors need to know. And in our second headline, a new study finds that many students miss the deadline to file forms to get financial aid for college and miss out on the money. Those two headlines, plus the big idea tying them all together, and so much more on today's Money in the Morning. Welcome to Money in the Morning. I'm Bobbi Rebell from the Financial Grown Up Podcast, coming to you from my very grown up kitchen in New York City.
I'm Joe Saul-Sehy from Stacky Benjamins, live from my mom's half-finished basement in Detroit, Michigan.
And this is the podcast where we cover two recent stories ripped from the financial press. We don't only read them like those other podcasts, but we get into why they matter to you, why you should be paying attention. And then we wrap it all up with a big idea at the end of the show that you can take with you and make your own.
Today's episode of Money in the Morning is brought to you by Tiller, your financial life in a spreadsheet, automatically updated every day. Manage your money in a spreadsheet 10 times faster with Tiller, the only service that automatically updates Google Sheets and Excel with your daily spending, transaction, and balances. Check it out at stackybenjamins.com/Tiller. Happy day, Bobby.
Happy day. How are we doing? Where's our coffee mug today, Joe?
I have the M22 coffee mug. This is a nice 2-lane highway in northern Michigan that every time I have this coffee mug in front of me, I feel like I'm up in Michigan's wine country. Beautiful area. And you?
I have never been to Michigan's wine country. I'm keeping it simple with a lovely vanilla-covered white mug here, going for the simplicity and calm that is my life.
You are hoping for more calm and less work going on in the background. I'm glad we don't have drills running in the background.
We don't. We're doing a little renovation here at the Financial Grown Up headquarters, but they're going to be quiet for, I hope, at least the length of this show. We'll see how it goes there, Joe.
Well, let's see how Boeing and college students are doing on, I don't know, their life renovation. Let's get this party started.
Good morning. You supply the coffee. We'll bring the headlines. Here they come.
All right, Joe, I've got the first headline, and it is from MarketWatch, and it is by Claudia Assis, and it is about a topic that has a lot of us paying very close attention to. It's a very serious story, and we're going to talk about the story, but we're also going to talk about what it means for the company and also what it means for investors. Here we go. Here's what Wall Street hopes for Boeing in the wake of the 737 MAX grounding. Hundreds of Boeing MAX jets around the world are grounded after a second fatal crash in less than 5 months involving one of the models. U.S. and Canadian aviation officials on Wednesday grounded the planes a day after several major aviation agencies and airlines in Europe, the Middle East, and Asia did so. Investors and analysts are still evaluating the financial implications for Boeing, assessing the importance of the plane for its bottom line, and reviewing the company's deep cash reserves. Deep cash reserves is something we're going to be talking about here, everyone. Boeing shares have taken a number of hits. This story, of course, is going to air a little bit after this, so I'm not going to give you the specific things, but it has been hurtful to Boeing's stock. An analyst, Ken Herbert at Canaccord Genuity, is quoted in the story as saying, quote, "At this time, we see the best case scenario for Boeing as a 6 to 8 week grounding." The global groundings came after the MAX 8 jetliner crashed in Ethiopia on Sunday, killing 157 people. In October, the same model was involved in a Lion Air crash that killed 189 people in Indonesia in eerily similar circumstances. The company started working on a software upgrade soon after the first crash in October, and the upgrade is expected to be ready to go in a few weeks. The upgrade installation itself is likely to be, quote, relatively easy and to cost a relatively paltry $500 million. The grounding could cost about $1 billion a month in lost free cash flow from delivery delays. The monthly bill could go up another $1 billion or so, depending on how much Boeing may have to reimburse airlines for the disruption, he said. analysts at JP Morgan. So we're getting into now what the analysts are saying about this that are following the company and the perspective from a business perspective. Had said in a note that the 737 MAX delivery halt was probable, but while, quote, ostensibly negative, it may be anticipated in the stock. And that basically means that it's largely priced in when you see the stock price lower. The analyst had said that if Boeing stopped deliveries, it would likely keep building aircraft, quote, for as long as possible and hold them in inventory to avoid any disruptive changes in the production cadence. This paragraph, I put a big circle around, Joe. That's where Boeing's deep pockets should be useful, the JP Morgan analyst said. Boeing generates, quote, far more cash than any industrial company in the world. So basically, I take that as saying Boeing has a big emergency fund.
Yeah.
So that, from an investor standpoint, is something that the analysts are really zooming in on. And just to read you a little bit more, cash flow hits related to the grounding would be a disruption, quote, but deploying the company's financial resources to support a critical global franchise and shore up confidence in a key piece of the aviation landscape for the next few decades makes a lot of sense in our view. So that's also a long-term perspective that the analysts are having on this situation.
There's a ton of takeaways here. I mean, just for the average American family or any family, I guess wherever you are, it doesn't even have to be an American family. But this idea of preparedness, about having the deep pockets, I think the fact that they have so much cash on hand and so much free cash flow that even though this is a big disruption for the company, that, analysts aren't worried about Boeing withstanding something that would sink a lot of companies. I've seen some very simple. I mean, imagine if you had a problem in your life that lasted 6 months. You had to not only pay a bunch of money to take care of it, but you also at the same time couldn't do your main job as much as you could because you're busy taking care of it. And then at the same time, you're missing out on all that income coming in because nobody's buying your product.
Exactly. They have the buffer so that they can pay attention. I mean, this is a tragedy. People have their lives lost here, and they have the financial resource to say, okay, stop. We're going to stop. We're going to figure out what's going on, and we can keep doing our business behind the scenes, but not deliver any planes until we know that things are going to be ready. And so having that cushion is really important. And it's also going to probably protect the stock to some degree to keep a floor in terms of, obviously it lost ground,
Sure.
but it also is a comfort to investors that this is a company that has been planning long-term, that does have those cash reserves and is able to hit the pause button and deal with a problem without having financial issues in the short term as well.
Let's talk about the stock though for a minute, because I think that a lot of people will see this as temporary, and they'll see it as a buy. Go buy. People say to buy stocks when they're on sale, so go buy Boeing now. I think you need to hit the pause button on that, because the financial implication of this, we don't know the scope. And when you look at what this article talks about, Wall Street's hope, they say best case scenario, meaning there's going to be a lot more information that still comes. So at this point, I think going in and buying Boeing stock is very much just a bet, and it can get worse. It can get much, much worse for Boeing. So I don't know that Boeing is necessarily a buy yet. I think when we start seeing how Boeing reacts to this and see if the software upgrade allows them to fly these planes again, I think that'll be big.
The cash bought them some time to deal with the problem. It doesn't mean that the problem is not there, and it doesn't mean that we know all the information yet. There's a lot of unknowns still to come out, and they did talk about a lot of uncertainty and different timelines, and the truth is that's still very much in development. So when a stock goes down, maybe just because the overall market goes down or a macroeconomic situation, that is a time, as Joe alluded to, that you maybe see it as more of a buying opportunity. This is very stock specific. It is down for a reason. And so that is something that people should pay attention to. And there's infinite stocks out there to invest in. So, there's plenty to pick from if you're an individual stock buyer.
Well, and look at the data. I mean, not just with this stock, but whenever you buy a stock, it isn't just about the news headline. We do this in front of a live Facebook audience, and Dylan here says, sadly, many DIY stock pickers rush to pick up some shares since they haven't looked at their cash reserves in the long-term picture. They just react to the news story. I like the reaction to the news story as step number one, but after that, you have to go into the financials. And then you have to think to yourself, what's the impact of that going to be, and actually run some numbers, which, by the way, is not nearly as hard as people think it is. Go into the cash flow statement, look at what this does to the cash flow statement, and then ask yourself, what does that mean for the shares? Shares are generally priced based on a fair valuation. And so the valuation right now down significantly. And I think Dylan was joking earlier that it was the prices we're recording this is the same as it was February 1st of this year, which is not catastrophic yet.
Not yet. I do want to point out the last paragraph of this story does say the company is expected to report first quarter results next month, and analysts are expecting adjusted earnings of $4.29 a share on 29 cents a share on sales of $25.4 billion, which would compare with $3.64 a share on sales of $23.3 billion in the year ago period. So they're expecting those numbers to be higher, but this was not necessarily calculated in those numbers. And if you are considering buying, you should see what's said on that call. If you can get on the call, great, but certainly most companies make those calls available after the fact on their websites. So you can get more insight into a month from now where the company is financially, if you are interested in really getting the information that you should have before making a decision like that.
There's another domino here. Michael Lewis, the writer, Michael Lewis, in one of his early books, talked about the second domino and how he learned to not look at the first domino, which is what's going on at Boeing, but look at the second domino, like what else happens because of this. And Jim from wallethacks.com is here hanging out with us. Jim says airline stocks got dinged too because of this, since they can't and shouldn't fly the plane. Southwest took a small hit. And there's going to be, Bobby, some second dominoes all over the place that you might want to look at as well. Don't be myopic and just look at what's going on at Boeing.
Right. And of course, suppliers, whoever is suppliers in the plane, even if Boeing gets back on track and a supplier is not in any way found at fault or anything, any delay or any hiccups in Boeing's production schedule or delivery, buying, sales, whatever it may be, that impacts all of their suppliers as well. So that also could be, as you say, a domino effect.
Going back to the personal effect of this, though, think about this in your own life, which is if you got to go back and fix something, that's time that's taken away from planning out for the future. It's also resources that you have to do to fix that thing and going back and redoing it. So there is this accordion effect, I think, where I don't even know how to phrase this, but the loss of time, the loss of money has this longer impact than people think. And I think that's our takeaway, is that fixing it is doubly costly in your life.
Yeah. Just because they have the resources to fix it doesn't mean that those resources aren't being spent, and it will impact their bottom line, and it will impact their balance sheet. So there is a definite cost to this, and it's better to prevent ahead of time.
Move on to our second headline.
Yes, let's do it. I think you're reading that one.
I am. Headline number 2, Bobby brought to the table. This one is from the Wall Street Journal, and it is written by Melissa Korn. Many needy students file federal financial aid form too late, analyst finds. Doesn't that kill you? Not only are some people going to school going to school that they might not have gotten into, people that really need it might not be getting the aid they need.
Right. This is about people that qualify for financial aid, should be getting it, but because they don't fill out the forms on time or early enough, and we'll get into that, they are missing out on free money or, less expensive student aid that they're entitled to. That's what's important. They're entitled to this. They deserve it and they need it, and they're not getting it.
Bobby, I can't pull this up. Do you mind reading it?
Sure. All right. So many needy, this is, as Joe said, from the Wall Street Journal, from Melissa Korn, and it starts, many needy students file federal financial aid forms too late, analysis finds. And the story begins. The share of college applications and students filing for financial aid has increased dramatically in recent years. But many who most need assistance are submitting their paperwork too late to get the funds, according to a new analysis. Campus Logic, a company that helps nearly 500 community colleges and private and public four-year schools manage their financial aid processes, examined financial aid applications called the Free Application for Federal Student Aid, or FAFSA. That is an acronym I think every parent of kids that are on their way to college is very familiar with. Not that we would know anything about that, Joe.
No.
That application turns on the spigot for financial aid like Pell Grants and Stafford loans, as well as for state scholarships and many institutional awards. The review of 2.4 million FAFSAs submitted between October 1st of 2017 and October 31st of 2018 for aid that would cover the 2018 to 2019 academic year. That's about now. So this is pretty current. Found that 30% of students whose parents' AGI, adjusted gross income, was in the lowest quintile submitted their FAFSA after March 1st of 2018. So guys, you could submit it as early as October 1st. They're going for March 1st. Meanwhile, 2/3 of those whose parents were in the highest income quintile, it's a big word for me, quintile, Joe, earning upwards of 133,000 submitted by February 1, so a full month earlier. Illinois, North Carolina, Washington, and other states make awards on a first come, first served basis, while some states set hard cutoffs in January or February. By mid March, when many older, independent, and low income students start filing for aid, deadlines have passed for grants in Connecticut, Maryland, California, Michigan, Missouri, West Virginia, and elsewhere. All right, Kim Cook, executive director of the National College Access Network, a nonprofit group that supports expanded access to higher education, says, quote, absolutely, timing is everything. Other states without firm deadlines often run out of money for scholarships before many needy students request aid. Illinois turned away applicants for this year's Monetary Award Program grants beginning in early April of 2018. The Tennessee Promise Scholarships, which cover full tuition at community and technical colleges, has an early February deadline, and another Tennessee grant aimed at low-income students taps out by May. 3/4 of prospective first-year students who were dependent on their parents submitted their FAFSA forms before February 1st of 2018. Just 36% of independent first-year students who weren't expecting financial support from their families did so. In addition to state deadlines, applicants need to take note of school-specific deadlines for priority access to institutional aid. And that priority access idea, Joe, is really important because, as has been alluded to earlier in the piece, there's a finite pool of aid, and some of them are first come, first serve. You might qualify, but other people qualified, got there first, and you don't get. So anyway, going on just quickly, that includes scholarships as well as work study assignments that must go to students with demonstrated financial need, but not necessarily those with the absolute most need. Again, you qualify, you might not be the most qualified, but if you qualify and you get there first, you're getting the money, and the ones who are also qualified, maybe more qualified, but get there later, may not get the money. And I want to just end with one quote from Carlo Salerno, Vice President of Research at Campus Logic. Quote, we need to rethink how states grant and institutional scholarships get awarded to ensure low-income students applying later in the aid cycle aren't systematically being left out. That doesn't appear to be happening today. I kind of take issue with that a little bit.
I do too.
About that. I don't know if the system needs to be fixed so much as we need to increase awareness to these students, their families, and the schools that they attend to make these deadlines. That's a basic skill. If you're going to succeed in college, you need to learn, make the deadline, know what the deadline is, and hit the deadlines.
Who's this on? Is this on high school guidance counselors? Like, where's the problem?
I think it's a community. I think absolutely high school guidance counselors, absolutely. They should be the absolute safety net that no one slips past. But it doesn't mean that parents can't be helpful here. It doesn't mean that these kids, in theory, are at least 16, 17, 18 years old. Some of these are older students, as the article indicates. There has to be some self-awareness and self-responsibility among the students that they need to be educated. This goes to financial literacy in the school. You're going to pay for college, go for the free money, hit the deadlines for the free money and even the better work study programs. And yeah, it should go to the schools. And there's nothing wrong with these colleges getting the word out in some kind of marketing program that the FAFSA deadline is what it is.
Our friend Lori, hanging out with us on Facebook, says she works at a college and says, I just pulled a list of incoming freshmen for the fall semester this year, and 8 of the 15 that she looked at have not yet filled out their FAFSA forms. They technically have until July when tuition's due, but scholarships are being awarded now.
Mm-hmm. Free money. Free money. Would you pick up $1 on the floor? I would. Free money.
It's so tough. I'll tell you that when I filled out the FAFSA form, I thought that that it was a complicated, convoluted form. But I'll tell you what you do. Just take it one question at a time. Like, seriously, it's an elephant, but just eat it one bite at a time. And before you know it, you finish the form. Don't worry about the 7,000 questions. Just answer the question you're on now. Yeah.
And the other thing I would say is, so this goes to my idea that this is about a community, because it's up to the students to know the deadline. But the truth is, a 16-year-old is going to be overwhelmed. And there's a lot of questions on there that you kind of need adult help with. You need to communicate with your parents. You need to get a lot of data from them. So that's where the student should have the ultimate responsibility to be sort of the ringleader. But the parents need to be involved and make sure the student is getting the information they need. The guidance counselors need to be involved and make sure the student knows the deadline and that they have the tools and resources. Maybe sit down with the students and help them fill it out. Maybe you sit down with a family, because maybe the family needs help to figure out all the different information points that you need to put on there, because there is a lot. It is a big, big, big form. It's not a little easy postcard kind of thing for those of you that haven't seen a FAFSA.
Kathy says, I think some people think $500 isn't going to help much, but if you can get 2 or 3 $500 ones, they add up. And listen, everybody, no matter how much money you make, can get an unsubsidized Stafford loan. And so this is really, in the big scheme of things, not a high interest loan. It's money that can be the difference for some family between being able to send some child to school and not send them to school. So, and that's significantly more than $500. But to Kathy's point, if these are the poorest people that need aid the most, they're probably eligible for a Pell Grant. And people, think maybe $500, not that much money. But remember how just the books for college, the price of school textbooks, college textbooks, is absolutely stupid.
If someone handed you $500 right now, you'd be pretty happy. I'd be very happy. I think $500 is a lot of money.
Well,
I think it's worth. And remember, you're not necessarily only filling out the form for $500.
Right.
It could be significantly more. And a lot of people would be surprised that they may qualify for aid that they did not think that they would qualify for. It's not just a full scholarship. It's, like you mentioned, smaller amounts. It could be work study. It could be better loans, because private loans can be very expensive. If you can get these government loans, if you qualify, it really is worth it. And I would also urge people to, once you get loans, always know what you owe. I hate to make a little rhyme there, but understand how they work when it comes back to repayment. I think you and I are both doing episodes of our various podcasts with David Carlson, who wrote a book about student loans and how to pay it back. And a lot of it has to do with really understanding the mechanics of it and what your options are.
Yeah.
So you shouldn't be afraid of getting a loan. Just make sure you know what you're getting, get the best deal you can, and then know the best way to get it paid off.
Lori says that there's very few $500 awards at her school. Most start at $2,500. So there you go. More money in it there. And to our point later about high school guidance counselors, Jim said it was his guidance counselor who was the one who made sure he filled out the FAFSA form.
And they're intimidating.
Yeah, I think
it's not bad to get an adult's help.
Well, and I think getting an adult who knows, and whether you have and my kids had good guidance counselors and bad ones. Their freshman year in high school, they had a horrible one. Their junior and senior year, luckily, they got transferred to one that was much, much, much better. But these people kind of hold the keys, and being a little bit in their face, I think pays huge dividends.
And they want to help you. That's their job. That's the happy thing, because if they get you money, then they've succeeded. And I think that they will feel good about that, because they're people too, and they want you to be successful, and they want you to get the money that you are entitled to. And you should remember that this is money that you're entitled to and you've worked for and you should get.
Getting away from the guidance counselors, this is just another reason, Bobbi, that I really like the weekly planning meeting. that I advocate all over the place. You know, it doesn't have to be a long meeting, but at the end of this meeting, what Cheryl and I do, and I encourage everybody to do, is look at the next week, the next month, the next year. And if you do that for just a few minutes and you take out the calendar, like some of these things are such big deadlines that they won't fall through the cracks, but they do because we're busy, because we have so many different things we do. But if you take time for just a 15-minute money meeting where you look at what bills came in that week, look at your savings, look at how you're going to spend money the following week, the following month, the following year, and then plot out important dates. 15 minutes. We do it over wine. Sometimes we do it at the IHOP over breakfast. I don't know if you know this, the IHOP, International House of Pancakes, 4 different types of syrup. It's an amazing place to have your money meeting.
Okay, Joe. Anyway, I want to just point out one last thing before it's kind of going to lead into our takeaway for this. And that is timing. I mean, you don't have to hit the deadline. It's okay to be really early too. Being early is important here because even though there may be a deadline for this and for other things that I've applied for in life, they actually take into consideration basically how eager you are, not necessarily with these, but in many things, it's okay to be the first one online for something. So one way to certainly not miss a deadline is what is the first day I can file the FAFSA or any other relevant forms, and just do it as soon as it's available, because many of these state programs, it is first qualified, first to get. So there's varying degrees of qualifications, but if you meet that bar, let's say it's people that score on whatever measurements they have between an 80% and 100% of qualifications, you might be at 81% and someone else might be at 99%. So they're more qualified than you, but you file first, you're going to get the money. So It's really important not just to meet the deadlines, but because it's a finite pool of money and they're giving out the first people in that apply successfully that are qualified, even if they're not the most qualified, get the money. So get those forms in as soon as they are available, not just by the deadline. And that's our takeaway. Early bird specials aren't just for seniors. And so appropriate at the IHOP, you know?
Yeah, absolutely. IHOP, if you want to sponsor the show, write to me, Joe at stackingbenjamins.com. We could work something out. We could talk about blueberry pancakes every show.
I like blueberry pancakes, actually.
Be amazing.
Chocolate pancakes are even better. Banana walnut.
Hey, speaking of the cost of going to IHOP, I don't even know how to make this transition work.
Well, I think we want to talk about being organized, Joe. You got to be organized.
There you go. Be organized so you can go to IHOP more. The way to do that is through Tiller. Thanks to Tiller for supporting Money in the Morning. Tiller is your financial life in a spreadsheet, automatically updated every day. Here's what I like about Tiller. I like the fact that even though it's based on a spreadsheet, which makes a lot of people, me included, go, yeah, no, thank you. I don't have time for spreadsheets. It comes with a bunch of templates that are already preloaded. So you don't have to reinvent the wheel. You can go in and have a very simple template like I do, or like my mom does. She likes tons and tons of tabs with every chart, graph, every way to slice and dice your money. And you know what? If you don't like it, different than a lot of apps out there, if you don't like it, because it's a spreadsheet, you can actually change it, which is awesome. If you kick the tires on Tiller, use our link. You can try it for free. stackingbenjamins.com/Tiller. That'll take you to Tiller, but it also gives you a little more time off because you use our link, a little more time to test it for free. So thanks to Tiller, and thanks to everybody who's used our link, because the way that we're affiliated with Tiller is when you use our link, if you do buy it, then they send us a thank you for sending you their way, and that's how we keep podcasting. All right, good stuff.
Podcasting, Joe, right?
Yeah, absolutely. We ready for a big idea?
We are ready for the big idea and the big reveal of the brilliant quote that you have to share with us.
Yeah, I made this up on the spot. No.
Hours and hours of preparation have gone into this moment, Joe.
Well, and that's the thing is it is about preparation. Nice job.
It is actually. That was very meta, right?
Yeah, good work there. Both of our stories today were about preparation. I mean, clearly the college scholarship idea and college and filling out the FAFSA is all about preparation. But really, you think about going back and fixing it. And listen, we don't know where the problem is at Boeing yet. Nobody knows why these planes crashed. But we certainly know that the more prepared you are, the luckier you get, to quote a football coach, and also the better things go in your life. And I found this quote, which is the best preparation for good work tomorrow is good work today. The more you do good work today, the less you have to go back and fix it later. The more you can focus your energy on things in the future, on tomorrow, and stuff that enriches your life, instead of constantly spending your life looking in the rearview mirror, hoping that someday things will get better. And until then, you're just going to keep messing it up. Don't do that. And I think that's it.
Very well said, Joe. All right, my friends, if you want to live a rich life, you got to be financial grown-ups.
And go stack some Benjamins, peeps. We'll see you next time back here at Money in the Morning.
Bye, guys.
This show is created by Joe Saul-Sehy, hosted and produced by Bobbi Rebell and Joe Saul-Sehy, is engineered by Caden Thompson, and all put together by a pack of well-trained ferrets down here in Joe's mom's basement. You'll find Bobbi at the Financial Grown-Up Podcast and Joe at the Stacking Benjamin Show. Go say hi to them there, too. Online, visit us on Twitter at Average Joe Money and at Bobbi Rebell, or come join a live recording at our Facebook page. That's facebook.com/iStackBenjamins. I know you already know this too, but Money in the Morning is for entertainment purposes only. You should not act on anything recommended by a bunch of entertainers in a basement or even a Manhattan kitchen without first consulting your financial advisor. And second, dude, have your head examined. Have headlines you'd like us to discuss? Send them to joe@stackingbenjamins.com or put them on our Stacking Benjamins closed Facebook group. This show is a collaboration of Stacking Benjamins LLC and BRK Media LLC. Copyright 2019. All rights reserved. I'm Joe's mom's neighbor Doug, and I reserve the right to always say, we'll see you next time back here on Money in the Morning.